This is the Real Estate Investing Abundance Podcast. I'm your host, Dr. Allen. I know you're excited to get into today's show, but I have a very exciting announcement to share with you before moving to the show. We've just launched a complimentary and comprehensive webinar that, among other things, shows you how to legally use passive real estate investing to reduce your taxes, recession-proof your nest egg, and take the sting out of inflation. If you are curious to learn more, go to stevetucker.com/webinar. It is complimentary and only takes a couple of minutes of your time. Once again, that is stevetucker.com/webinar. I'll see you in the webinar. Enjoy today's show. Hello, enlightened investors. This is Dr. Allen, your host for the Real Estate Investing Abundance podcast show. I'm delighted to be with you today and glad that you have decided to join us. We're going to take a look here today at an insider's view of the current multifamily investment landscape. Jerry Miller started his real estate investing career 16 years ago doing single-family rental, fixed flips, and multifamily syndications. Now, 16 years later, Jerry is just as passionate about real estate investing for building generational wealth as he was in his first year of investing. Today, Jerry shares with us lessons for evaluating real estate investments from his journey from full-time IT professional to transitioning to full-time real estate investor. So, Jerry, take us into the show and share a memorable experience that helped you to be who you are today.
Absolutely. Thanks, Dr. Allen. So I think a very significant life lesson for me is probably the first year or two out of college. I started my career at Florida Power and Light as a field engineer. And I remember seeing one of the older engineers who helped mentor me a little downcast. And I asked him, I said, "Hey, Norm, what's going on?" He said, "Well, you know, the stock market just took a dip, and my financial planner tells me that I can't retire, and I was planning to retire in 18 to 24 months, and he says now I need to wait." And he was just kind of crestfallen. And I remembered walking away from that experience thinking that he had done everything he was supposed to do. He had put his money in his 401k and the company matching, and if you just do that and you heads down work for 40 plus years, that you'll have this comfortable retirement. And I remember thinking right then and there that I was not going to be dependent on anybody else for my comfortable retirement. I didn't know what that meant. I was a 23-ish-year-old kid, had no idea about real estate investing and other really investing at all because I just didn't have a concern there. But that planted a seed in me that I needed to do something to be responsible for my retirement. And well, I'll let you go to the next question. There'll be some follow-ons where that lesson really came home to roost when it was time to start investing in real estate.
Well, thanks, Jerry, for sharing that with us. Are you currently investing in the stock market, or why not?
Great question. No, let me think. I think my wife still has an IRA that's invested in stocks and bonds because it's kind of locked up. But all of my 401 money, I had rollover IRAs, I had 401ks from previous employers. They eventually got rolled into a solo 401k. I have my own business. And then, of course, once they're in a solo 401k, which is considered a self-directed account, you can invest those in whatever you want. And my entry into commercial real estate was as a limited partner. I invested a portion of that, what was a rollover IRA, into the solo 401k, and I invested because I liked the stability of commercial real estate. I liked the lack of, hey, what happens when I retire? I'm a few years away from retirement, but when I retire, I don't want to have to worry about, is it a down market? Can I afford to retire now? I don't want to ask somebody else's permission. Can I afford to retire now? I want it to be when I'm ready to retire, that I don't have to think about, hey, it's a down stock market. The returns I've seen in commercial real estate is, especially multifamily, is people need a place to live. If the apartment is bought well, if it's bought at the right price, if it's managed, if it's got a good, asset strategy by the operators, then let's look at last year, right? We saw increases in interest rates. So what does that mean? Well, it means that your cash on cash returns have maybe come down 1%, maybe 1.5%. They haven't dropped to negative negative performance, like you might see if you're on some sort of annuity or fixed income. That's one thing, but you so overpay for that stability in the stock market, whereas in real estate, I don't think you do. I think you can get some very good returns, very stable returns for a whole lot less.
I totally and completely agree. And I don't understand why people keep putting their money in the stock market. I guess they like roller coasters. I don't know. Anyway, so interest rates, and I guess the whole real estate investing scene today. What is your take on it? Is it a good time to continue to invest in real estate? Some people say not now, no way. But what is your take on that?
Well, it's a multifaceted conversation. First of all, I think real estate deals can be bought in any market. Obviously, you have to pay attention to your cost of capital, and maybe there's a deal that made sense a few years ago when the interest rate, pick a number, 3.5%, 4%. A deal would make sense where it doesn't make sense at 7.5%. That's to me a given. Your costs are higher, so your revenues have to be higher in order for your net income to be the same, right? I mean, I think most people fundamentally understand that interest rates are one source of your cost of capital, but to me, they are not the only source. I mean, let's face it, one of the reasons I like commercial better than residential, you've still got assumable mortgages. I'm working on a deal right now that's got a 4.3 assumable mortgage rate. Is anybody afraid of 4.3%? I don't think so. If you don't look for these deals, you don't find them. So, for somebody that says don't look, I would say I think you're missing the boat. I think there are opportunities right now. I think there are motivated buyers. There's another element of commercial real estate that a lot of my investors have residential experience, right? Most people bought one house, they have a fundamental understanding of that process. And there are so many little twists and turns on the commercial side, like the assumable, that they just don't know about. I think, with also on the commercial side, you've got more levers that you can pull to increase revenue, to lower expenses, that you just don't really have on the residential side. And so there are things that make a difference in net income, that at the end of the day, it is the operator's job to maximize that net income, that you have so many more options than on the residential side. So people are blind to these possible things that can take a red flag down to a yellow flag.
Absolutely. Well, you have done a lot of single family properties, which a lot of people begin that way, but you've also done multifamily.
Mm-hmm.
What do you find that is applicable in terms of the single family process that is applicable to the multifamily?
Great question. So I think there are many similarities, right? You look at a house, and we flipped a few houses a few years ago. There's a basic: what is the house going to be worth when we improve it? What does it cost us to repair it? Therefore, if I know what it's going to be worth, I know what it's going to cost me to repair it, then I know what I'm willing to offer somebody. So I think there's some similarities there with the multifamily, that if you have an asset strategy, for a single family, maybe you add a bedroom, or you add a garage, or you do something, you add a brand new fence, and you're gonna spend dollars to make that property more desirable. I think you've got more options on the multifamily side. Something like a brand new sign. We did a deal, and we spent $5,000 on this brand new sign, and that and some very, very basic landscaping around the front entrance made a huge impression on the cleanliness. We literally landscaped and spent some money on a sign, and it just made it a nicer place to live. And I don't think you can do that as easily. Yes, you can still landscape a single family home, but you don't significantly increase net income in a single family home by doing landscaping.
Yeah, that is for sure. I was just talking to another investor a couple of days ago, and he's been in the business many, many years. And his whole strategy is to take care of the exteriors before they even begin to work on the interiors. And his argument is, if you can't get people into your community, you can't get them into your apartments. And I think that makes a whole lot of sense. Not something I had thought about to that great a degree, and I'm not sure that most investors do. I think their first focus generally is, let's take care of those interiors. But if you can't get people into your community, they're not going to even take a look at the inside there. So, what is the biggest positive and also the biggest negative surprises that you have encountered in your multifamily investing experiences?
I think the biggest positive is working with the other people that are just as passionate as I am. Right. I know there are some things I'm really good at. I really enjoy it. I've always got energy to do them. If it's given to me like that night, I'm digging in. I'm digging in and I'm trying to, add value to the rest of the team. And I really enjoy when we get together, typically, there'll be two or three of us and we're trying to solve something that's maybe not so easy. And even the guy that doesn't have all the depth can still have a great idea. And then somebody else kind of takes that idea and then makes it even better. And so very quickly we've gone from what are we going to do to, hey, we think we've got like this 80 to 90% solution and we've got a little bit more homework to do before we can say, here's what we're going to do to solve this problem. I think there are so many things in real estate that, we say, hey, it's a red flag when I've got a foundation issue. It's a red flag when this happens. It's a red flag when that happens. And, with just a little bit of thought, it's like, well, wait a minute, what is that red flag going to cost to fix? Well, if there's so much equity in the deal, I mean, I don't care if that red flag is going to cost you $50,000. If you got a couple $100,000 in extra equity in the deal, you're way ahead of the game. And so you just have to make really, really sure that, hey, that is a $50,000 repair and it's not a significantly more. So I think you can mitigate red flags, and I think you can do it extremely well with strong team members who have a lot of experience and just have, check your ego at the door. Just because you're the guy that's always done that particular sector doesn't mean all the ideas have to come from you. And let's just roll up our sleeves and get to work. And so there's been some neat moments where we've solved some hard problems, things that I didn't think were going to go quickly and easily, and we just brainstormed and had some great ideas in a short time frame.
Yeah, that brainstorming can often bring up some very interesting solutions that working independently we don't often think about. Well, what is the most negative surprise you've experienced?
Not everybody is as transparent. So I think within the real estate community, I would say, I don't know, 99 out of 100, most of the people I truly enjoy working with. And every once in a while I run into somebody that's all about them or is all about maybe not the best long term. I look at real estate that I want to have, lots of real estate assets paying, multiple streams of income. I'm willing to do the work. I'm willing to take baby steps. I'm not expecting, the yacht with the first deal. And every once in a while I'll run into somebody that just kind of doesn't, in my opinion, is not transparent. Is not forthright about, hey, where are we really? Maybe minimize some of the risks, maybe put on the rose-colored glasses, sell everybody on the blue sky version. And I just don't think that's the right way to behave. And it's not always obvious when you partner with somebody. I did have an experience one time where I partnered with somebody who I thought shared kind of my view. I like to let people know and say, hey, here are the risks, here are the rewards, here's what we think is going to happen, and let the investor make their decision about what they're comfortable with and what they're not. Because at the end of the day, I can't represent your risk reward profile. I need you to be an educated investor. I need you to be, hey, this is the deal I want to do. I want to go after the high risk because I want the high returns. Okay, that's an enviable strategy. I mean, for guys like you and I, we remember a few years ago the junk bond idea that you invest in 10 different junk bonds. One of them is probably going to go under, but the other 9 are going to do so well that they offset the loss of the 10th. That's a very productive investment strategy, but you have to know going into it that you have a chance of losing if 1 in 10 is just a random number, but there's some element of loss of principal that you have to accept. The bulk of my investors, I would say, are fairly new to syndications, and I have to really try and I usually like them to get started in a value add multifamily deal because I feel like it's similar to a dividend stock. It's a little safer. It's a little less likely to have huge appreciation, but it's a lot more likely that, if there's 100 units there, that If something bad happens, we might have 7 or 8 vacancies. It's very, very unlikely that we're going to have, 50 vacancies in a 100-unit complex.
Yeah, one of my board of advisors uses the word, don't get hung up in the hopium. And I think I like that term because it's so easy, I think, for a lot of us when we go out and we look at these properties and we go, I really like this property. We tend to want to really emphasize the positive and can get over enthusiastic, over optimistic about opportunities that may be good, but we really need to evaluate what is the downside on that too. So good lessons there, Jerry. Well, let's go back to the current state of the real estate market, and you talked a little bit about the interest rates, but there is so much uncertainty in the air these days. It's not just interest rates, it is so many things going on in terms of inflation. And then we're just talking really about the state of things here in the United States. And when we look internationally, there's a whole lot of big questions going on in terms of the broader economics. Enlightened investors, if you haven't done so already, be sure and click that like button and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes. So where do you see the real estate markets? I know I'm asking you to put on your crystal ball here or look into your crystal ball, but where do you see things going in the next 6 months to 12 months?
There's still going to be, there's going to be demand for housing in the United States as long as we're alive, right? We know for the last probably 10 or 12 years, we have simply not built enough housing units to sustain an even normal population growth. We know that a lot of people immigrate to this country, and we know that, the U.S. has consistently, grown in its population. And so there's going to continue to be that demand. I think one of the challenges that our country is going to have to face, and it may have to come at a government level, is that most of the new units being constructed are Class A. They're the high-end units. And so the Class B and Class C tenants are having a much harder time because in some cases, people like us are buying Class C and renovating them to Class B and raising the rents because that is financially what makes sense for us to do as operators. But that continues to deplete the pool of available Class C housing. There is no new Class C housing being built, right? If it's brand new, it's probably B. You got to wait 25 years before it becomes, Class C. So I think we're going to continue to have demand. When I think about inflation, when I think about interest rates, if you're a younger person, you might think the last 5 to 10 years are normal, but you would be mistaken. If you go back, I remember in the early 80s, was it Carter president? The interest rates hit 20%, 21%, like that. It was a very short time. But where we are right now with interest rates, I think 7.5% is the average interest rate for the last 50 years. And that should resonate with people that we're at average. So for somebody that says we're way too high, we're way out of the norm to invest, I would say, do you think for the last 50 years that people have not made money in commercial or even residential real estate? Because I would tell you they have. Now, you can overpay for a property, and that's a whole different conversation than should you be looking and should you be investing. But I think the reality is the honeymoon is over. I don't think we're ever going back to 2% inflation. I think 3 to 4 to even 5% is probably going to be normal. And the reason that I think that is I've listened to a number of different economists who have broken down some of the fundamentals that aren't going away. One of the drivers one of the drivers was supply chain issues during COVID, and that one has gone away. For the most part, you can generally go to the store and buy the things that you need to, and the prices are coming back down into reality. There were shortages, there were depletions that market demand caused some things to go up. So that's the one factor that fortunately has subsided. But real wages have increased, and they're not going to go back down. Energy prices have increased, and they're not going to go back down. and the federal government is printing so much money that doesn't appear to be stopping anytime soon. So all of these drivers of inflation, 3 out of 4 are still as strong as they've ever been. So does the Fed have enough control to make interest rates so high to totally stop the economy? Well, they can, but I think we've already seen, a couple of bank failures sort of let us know that, hey, Fed, your decisions have negative consequences if you get it wrong. And so I think that's going to sort of I think they're going to move a little bit more slowly. And I think the slower movement, the market's going to respond to that as stable. And I think people will just make their decisions based on where interest rates and inflation rates are for purposes of investing in real estate.
Well, tell us, Jerry, what your company is all about and what do you have to offer our audience?
Sure. So my company's name is Largo Group 2011. You could probably guess that I created it in 2011. I've really been doing syndications for about 2.5 years. Before that, it was residential. It was mostly a buy and hold rental strategy. We did talk about doing some flips. I've done some other things in real estate that just when I've had the opportunity to try something new, I will sometimes do it just to try it. So that was kind of fun. But really, for the last 2.5 years, I've been exclusively focused on commercial because I feel like now that I understand it, it's the best place for me to spend my time. So really, my real estate is really around talking to investors about, is commercial a good fit for their investment and why. I think there's some great tax advantages. I tend to resonate with other people, my age that are 40 or 50. So really backing up a little bit, when I was a 20-something, 30-something year old, I worked my job and I was trying to climb the corporate ladder just like everybody else, get the raise, get the promotions, yada, 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 put your 6% away into your 401k and let your company match. And that was my retirement plan was, I'm just going to let the company match. Well, one day I wake up and I'm probably a few years shy of 50 and I realize I'm not going to get to the comfortable retirement without doing something differently. And going back to, one of your first questions was, what was a significant moment in my life? I remembered thinking I needed to do something. I needed to be responsible for my retirement. The financial advisors had said, hey, do this and do that. But at the end of the day, they weren't going to be paying me when I wanted to retire. So I had to take matters into my own hands. And I really had to begin to learn a new skill set because as a software consultant, I didn't have anything native about my job that taught me about finances or, rates of return and all of that. I had to begin a process to educate myself. And in the process of educating myself, I recognized the pros and cons of the stock market, the pros and cons of real estate. And I try to look around at a couple of different options to help me retire. And I really came down to real estate's not that hard. I mean, you can watch a podcast, you can read a book, you can talk to a friend. You do have to do more than that to start investing, but you can get started very easily in your education process. And I would encourage all of your listeners to take advantage of, there are so many great resources out there. Just pick one and try and follow the thread. If you're listening to this podcast, don't listen to 10 different podcasts, listen to one 10 times because you'll begin to understand the thread of that podcast better than if you listen to this guy and he says one thing and you listen to the next person and they say something else. Well, now you're kind of stuck with, well, who's right? And the reality is, well, they're both right, but they're right for different circumstances. And you have to interpret which, how does my circumstance line up with the expert's advice?
And you can contact Jerry at Largo Group 2011.com, and that information will be in our show notes. Well, let's move into our last segment, as you call them, our esoteric questions here. So, one of your most difficult setbacks in life or business, how did you come through that time and what did you learn from that?
Biggest challenge as an IT guy in 2003, I was laid off when my wife was pregnant with our third child. She was 8 months pregnant. We were 1 month away. We knew that the company's health was deteriorating. I was a principal consultant. I was expecting that I would probably be one of the few that they kept around. And the reality was that like 95% of roughly 200 people were let go all at the same time. So I suddenly found myself without a job. My wife didn't work. I was the sole breadwinner, and I had to quickly figure out that at the time, software development, software implementation was at a low point in 2000. We had a boom right around Y2K, and then we had a number of companies sort of go belly up just a few years later. And so I'm a very practical person. I sat down and I didn't spend a lot of time crying in my coffee because it wouldn't have done any good. And I thought about, okay, it's my job to figure out what I'm going to do. And I think I remember it kind of drawing, if you think about a bullseye, this is what I'm really good at. This is where I'm paid well and all of my skills can be used. And here's the next level out of possible jobs that I could do to provide for my family. And I just kept having these rings. And I ultimately, within a day or two, decided I could go sell cars at CarMax if I don't have a job in 30 days. Like if I don't have prospects. I had set some goals, I had set some timetables, and I know that I can go get a job, like that. I'll work it because I needed insurance. I needed a lot of things to keep my family going. And I think just having those backup plans made a huge difference. It wasn't what I wanted to do, but I knew I am willing to do this if I have to. A lot of great things came together. I would encourage people, when you're going through difficult times in life, reach out to your friends. Do not be embarrassed to ask for help. Most people want to help you. People that I didn't even particularly get along with at my job, who weren't let go, I reached out to and said, hey, this is my situation. Here's what I'm looking for. And I remember thinking one of the guys that I really thought was a little bit of a jerk, just bent over backwards. She's like, man, Jerry, I'm really sorry we had to let you go. And here's a couple of guys that I think might be able to help you. And here's a phone number or two. And here's an email. And it was just like, wow, I really didn't expect such a warm, I don't know. I mean, I almost didn't even include him on an email that I was just hitting a few friends with some ideas. And he actually gave me a really good lead that while it didn't pan out, he went above and beyond the call. And so I would say that when you need people, you need to reach out. And obviously, when you've been in a situation like that, you are very motivated to help other people. Even when it doesn't help you, you feel good about sort of giving back to somebody when they have a need.
Well, 3 good things that have happened to you in the last 24 hours.
Well, I just got back from a long vacation, so that was an easy one. I had an amazing time with my family, my wife, and 2 of my 3 kids. So my 3 kids are adult kids. 2 are in college. One is past college, and the one that was past college wasn't able to join. But we just spent some good downtime in the national parks, and just getting outdoors, getting unplugged is a great thing. We've just had some really great growth time as a family. We made some amazing memories, and I'm just really reminded at how blessed I am. I think we get so caught up in the busyness of the day and maybe the negativity of the day that we kind of forget what's going right in our lives. I'm extremely proud of my marriage now for, I should probably know, is it 27 years? My kids are all great people. They're growing into hardworking people who I admire. And I think that's a really cool thing. Let's see, what else good happened? I don't know. I would just say that generally in life, I feel like my life has purpose. I just wake up in the morning doing what I enjoy, working with people that I enjoy, and it's a good thing.
And how are you putting your success as a IT consultant and entrepreneur to help to create universal well-being?
That's a cool question. I would say I kind of have a philosophy that money is not enough. Money by itself is kind of empty. I know a lot of people, they chase the raise, they chase the big payday, but if somebody just handed you a lot of money and you didn't work for it, I don't think that would be, the whole idea, hey, I'm going to win the lottery. I really don't know that would bring the satisfaction to me that I would want it to. I would want to, struggle a little bit, earn it, and then when you earn it, well, you earned it. You know that you worked for it. And I would say that as I look back, I like to use, the week of Christmas to New Year's as a week of reflection, what went right and what went wrong in that year. And I've had good financial years. And in my week of reflection, I realized that that wasn't really what was meaningful. What was meaningful in that year is that I was able to help some Section 8 tenants that I have, or do something that I realized that was meaningful. At the time of doing it, I was just, helping somebody because I could. It didn't cost me a lot of money. But then when I realized the impact that I had, it was really very, very rewarding. And so I think we need to be reminded that money isn't enough. I tell my kids, I need you to find something that you're good at that makes other people's lives better and that you can make a profit along the way. And then go out and find as many people to help as you can. And as I gave that advice to my kids, I was like, that's pretty darn good advice for me, because when you're making money doing something you enjoy and you're helping other people, I really just feel like that's your home run. That's as good as it gets right there. And you can really have a meaningful impact on the people around you.
Well, our last question, Jerry. Imagine you have come to the end of your life and you're on your deathbed. What do you look back on as your greatest joy and greatest sense of fulfillment?
I would say living a meaningful life, living a moral life, being married to my wife and doing marriage well in a world where a lot of people are sort of all about themselves. I've really prioritized my family and my children. So it would be living a good life that was worthy of being followed by them, and hopefully them actually following in my footsteps. So it's unlikely to be financial for me. It's unlikely to be some of the accolades that some people pursue. It's probably going to all be around, did I impact other people's lives in a positive way? Am I proud of everything that I did in my lifetime?
Well, Jerry, it has been a pleasure having you today. Thank you for enlightening us. And thanks for being on our show.
Cool. Well, thank you, Alan.
Enlightened investors, wait, don't go just yet. I just want to remind you about our recently launched webinar that you will not want to miss. If you're at all curious and would like to learn more about how real estate investing can diversify your investment portfolio, alleviate the anxiety associated with Wall Street swings, leverage your 401ks and IRAs to substantially increase the return on your investment, and do all of this with turnkey, hands-off, passive real estate investments, then you'll want to immediately go to steedtalker.com/webinar. In the webinar, we'll also address the common dubious investment schemes that you want to avoid. To access the webinar, go to steedtalker.com/webinar. I look forward to seeing you in the webinar.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steed Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steed Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steed Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at steedtalker.com.